Hello, everyone. I am Shahid Aziz, AAT certified accountant and MAT MAAT. I am running my own practice and to help my students, on the demand of my students, I have opened this new YouTube channel where I am teaching personal tax right now. And after completing this subject, I will teach the other subjects as well. So just write in the text box which other subjects you want me to record the videos. So let's start. Today, we are going to do task number 7 for personal tax. We have already covered task up to task number 6. So let's start. So task number 7 is identify whether the following are chargeable to or exempt from capital gain tax. So first thing on your exam is you have to see the number of marks. There are 3 marks. So don't spend more than 3 minutes. Just try to think about this one and try to save as much as time you can, because there are a lot of other things in this exam you have to do. A gift of an asset with a market value of £15,000 to charity. So charity is an exempt. So here are the rules. So first we will go through the rules. Yeah. So if we look on the rules here, so before starting this one, um, there are chattels. What are the chattels? So chattels there are 2 types of chattels. One is wasting chattel and the other one is non-wasting chattel. So wasting chattel is one with an estimated remaining life of 50 years or less. So if the life is 50 years or less, it is a wasting chattel. If the life is more than 50 years, it is called non-wasting chattel. So the difference between is the life and the second is wasting chattel. These are exempt. For example, racehorse, greyhounds, dogs, and boats. Um, there is an exception for plant and machinery on which we claim capital allowances. These assets are treated as non-wasting chattels. If plant and machinery is not covered by the non-wasting chattel exemption in note D below, then again would need to be computed upon its disposal. Such a calculation seldom required. The reason is we already claim the capital allowances. Yeah. So these are the different rules for non-wasting chattels. So when we will go through the examples, I will go through these rules with you. The next rules are you don't usually need to pay tax on gifts to your husband, wife, civil partners, or a charity. You don't pay capital gain tax on your car and anything with a limited lifespan, say clock. Yeah. And next, the rules here, the next rules deduct costs. We can deduct the certain costs from the capital cost. What are these costs that we can deduct to compute the amount chargeable to capital gain tax? Is the fees we can deduct, cost to improve your possession, but not repairs. Not repairs. So repairs cost we cannot claim. VAT. You can't deduct certain costs, including interest on loan to buy your possession. Costs you can claim as expenses if you have used your possession for business. Okay, so this information, we have enough information to solve our task number 7. So task number 7, assessment number 1 and assessment number 2, we will do it here. So gift of an asset with the market value of £15,000 to charity, as we see in the rule, it is an example. Destruction of a valuable painting caused by a fire, yeah, it is chargeable. A shuttle with a useful life. So anything the life less than 40 years is called wasting shuttle, and anything life more than 50 years, sorry, less than 50 years is called wasting, and more than 50 is called non-wasting. And we know the wasting shuttle is exempt, so it is an exempt. The next thing is show whether the sale of each asset below result in a taxable gain, an allowable loss, or in exempt for capital gain tax. The amount of gain or loss should be entered in the final column. Do not leave any cells blank. Enter all figures as positive. So whole pounds only. So these are 4 marks. So don't spend more than 4 minutes on this question. So the first one is desk. So proceeds are 7,200. Here I put here, and the cost is 5,800. So if we look now, know the rules. If we look now, normal calculation rule we have to apply. The reason is, if we look here, normal calculation rule, why we need to apply the normal calculation? Normal calculation we apply if proceeds are more than 6,000 and cost is less than 6,000. Yeah, so we need to apply the normal calculation. So if we if we look here, the proceeds are more than 6,000 and the cost is less than 6,000. So when we will apply the normal rule, it is 1,400 pounds. The next one is racehorse. Racehorse, we said that has the life less than 50 years, so it is a wasting shuttle. So it is an exam t-shirt. The next one is mirror. So mirror, if we look now, proceeds are less than 6,000 and the cost is greater than 6,000. Now we have to go on the rules now. So if we look the rules now, cost is greater than 6,000 and proceeds are less than 6,000. We need to apply this rule. Deemed gross proceed is equal to 6,000. Yeah. So we will say deemed gross proceed 6,000. So 5,500. So it is, we will replace this 5,500 with 6,000. So 6,000 minus 6,300 will be 300 pound loss. Yeah. The next one is car. So the cars are an exempt. Yeah. The next one is calculate the capital gain on the sale of the land. Enter your answer in the whole pound. So this question is about the part disposal. Yeah. So Mrs. B bought 30 acres of land for 126,000 in December 2000. And in April 2023, she sold 10 acres of the land for 75,000. So this is the formula we need to apply. Yeah, the remaining acres were valued at 175,000. So the first thing is, what is A? A is equal to gross proceed of the part disposal. So the sales amount is 175,000. So gross proceed, the remaining, no, sorry. No, it's 75,000. She sold 10 acres of the land for 75,000. So A is equal to 75,000 and B is equal to market value of the remaining is 175,000. So if we add A plus B is equal to 250,000. So next thing is we need to find the cost. The formula is A divided by A plus B multiplied by C. So A, what is A is A is 75,000 divided by A plus B is 250,000 multiplied by 126,000. That is a cost, regional cost. We will get 37,800. You can see this formula here on the top bar. I put in Excel sheet. So it is 37,800. This is the cost of the land, the part land that we sold. Now we will find out the amount chargeable for capital gain tax. It is 75,000 minus 37,800 is 37,200. So this is the answer. Okay, so now we have completed the assessment number 1 for task number 7. Let's do quickly the assessment number 2 for the same task. So identify whether the following statements are true or false. An uncle and niece would be treated as connected persons for the purpose of capital gain tax. It is false. The rules, we have seen that the if I show you here the rules here, you don't usually need to pay tax to on gifts to your husband, wife, civil partner, or a charity. So uncle, they are not exempt. Yeah. So they are not connected person. A disposal of an asset caused by death of taxpayer is chargeable disposal for the, it is false. It comes under inheritance tax. A gift of an asset to a friend would be a chargeable disposal for the capital gain tax. Yes. Yeah. Gift to a friend would be a chargeable disposal. Yeah. So Next one is calculate the amount chargeable to capital gain tax in 2023-24. Each is disposed of by Mr. A. So this one is 7 marks. So try to answer this question in 7 minutes or less. Mr. A sold a car for 12,700. He had bought the car for 20,200. We already said that the car is an exempt for capital gain tax unless used for a business. The next one is painting. Mr. A sold a painting for 10,400. So he bought the painting for 7,000 here. If we see now, I put it here in Excel, this formula here. So cost of the painting was 7,200 and the proceed is 10,400 and the and 2.5% of auction fees paid on the cost. So 2.5% of 7,200 is equal to 180. Mr. A had spent 400 pounds in total insuring the painting. So this 400 pound insuring the painting is not a deductible cost. Yeah. So the cost total is 7,380 pounds. So amount chargeable to capital gain tax is sold amount proceed is 10,400 minus 7,380 is equal to 3,020 is the answer. The next one is Mr. is land. So this question is about the what we have to do is we need to find the amount chargeable to capital gain tax. Yeah. So Mr. A sold all his land. So proceed is 170,000. So the cost is he bought 2 pieces of land. First time he bought 10 acres at 45,000 and then he purchased next 15 acres for 65. So if we add 45 plus 65 is equal to 110,000. And the legal fees he paid is 2,000 pound plus 1,500 pound. So 2,000 pound he paid and 1,500. So if we do know, if we minus all these costs from this the proceeds, so it is 56,500 is the legal the amount chargeable to capital gain tax. The next one is Mr. A sold a ring for 5,000 508,000. Okay, 1 minute. Before we move to the last question, let me go to this land question back. Here, Mr. A paid 5,000 to a company to repair a drainage. Yeah. So here, repair cost is not allowed. Please see rules. If we see the rules now, cost to improve is allowable. Anything related to repair is not allowed. That's why we don't need to include this 5,000 pound. That's why. The next one is ring. Mr. A sold a ring for 5,800. He had bought the ring for 5,000 pound. Ring because proceed and cost both less than 6,000 pound. So according to rules, if we look the rules now, if proceed and cost both are less than 6,000, it's an exempt. So that's why amount chargeable to capital gain tax is 0. Yeah, this is the end of our lecture. If you like this one, please subscribe this channel and like this video and share with your friends. And also please let me know if you are having difficulty with any question or any topic and what other lectures you want me to record for you. Thank you very much. Thank you.